Hey everyone, and welcome to The Explainer. Today, we are sinking our teeth into a fascinating analysis from Barron's about a company called JBS. You might not know the name, but they are an absolute giant in the food industry. So, let's get right into it.
So, to kick things off, I have a question for you. If you had to name the biggest food company in the entire world based on sales, who would you say? Just take a second to think about it.
You know, a lot of people's first guess is Nestle, and that makes total sense. They're everywhere. But it's not them.
Okay, what about PepsiCo then? Another global titan. Gotta be them, right? Nope, not PepsiCo either.
The real number one raked in an absolutely massive $77 billion in sales last year. Just to give you some context, that is more than the entire economic output of countries like Croatia or Luxembourg. It's huge.
And that company is JBS, a powerhouse based out of Brazil that has become the undisputed king of meat packing on a global scale. They've just quietly flown under the radar to take that top spot.
But here's the real puzzle, and it's what caught our eye in the Barron's piece. They put it this way: even though JBS is the biggest, its stock is getting treated like hamburger rather than steak. So what is going on here? Is this a hidden gem, or maybe a really risky bet?
So here's how we're going to break this down. First, we'll get into the sheer scale of JBS. Then, we'll explore the argument for why it might be a bargain. After that, we got to look at the problems, the headwinds it's facing, and the, let's call it, a controversial family shadow. And finally, we'll try to figure out the path forward.
All right, Section 1. Let's really wrap our heads around how massive this company actually is. It's almost like a titan operating in disguise.
I mean, their dominance in the market is just staggering. JBS is the #1 global producer of beef and poultry. They're #2 in pork. Plus, they own well-known brands like Swift and hold a controlling 82% stake in Pilgrim's Pride, which is another poultry giant in its own right.
And this chart really puts that scale into perspective. It's $77 billion in sales. JBS isn't just a little bit ahead of household names like Nestle and PepsiCo. They're playing in a totally different league.
Okay, so let's move on to Section 2. How does all this size translate into a potential bargain for investors? This is what Barron's calls the stake argument, the juicy, positive side of the story. Well, when you put JBS side by side with its main U.S. competitor, Tyson Foods, it really does look cheap. Its EV to EBITDA multiple, which is basically a quick way to value a company, is just 5.4. Tyson's is 7.0. And its future PE ratio, another key metric, is also lower. To put it simply, the numbers suggest you're paying less for every dollar of JBS's earning power.
And JBS is not just sitting on its laurels. They are pumping $1 billion a year for the next 5 years into expansion, including building new plants right here in the U.S.
And this investment comes on the back of a really solid track record. JBS has been growing its revenue and earnings at an 8% clip year after year, actually outpacing its rival, Tyson.
And for all you income investors out there, this is a big one. The company is aiming for a dividend payout that could yield nearly 7%. That's a pretty significant return in this market.
Okay, so that all sounds pretty great, right? That's the bull case. But remember, the stock is being treated like hamburger. So let's flip the coin and get into the hamburger argument, the less appetizing stuff that's making investors pump the brakes.
And yeah, there's a whole list of issues weighing this stock down. Recent earnings were weak. Their giant U.S. beef business is actually losing money right now because cattle costs are so high. But on top of those market issues, there seem to be communication problems. Their financial reports use both international and U.S. accounting standards, which can get confusing. And then there have been technical glitches on investor calls. It all adds up to a picture that makes people pretty nervous.
And that brings us to what might just be the biggest risk of them all. This one gets its own section. We're talking about the company's history of controversy and the family that's at the center of it all.
So JBS is controlled by the Batista family in Brazil. They own 48% of the company. Now, back in 2020, their family holding company had to pay a $256 million penalty to the U.S. Department of Justice. Why? It was to settle an inquiry into what the DOJ called a scheme to pay millions of dollars in bribes to government officials in Brazil. The whole point of the bribes was to get financing and other business advantages. This isn't some small blip. It's a major scandal, and that reputation still hangs over the company.
But you have to hear the other side. Some major investors argue that all of that is in the rearview mirror. Michael Martino from Mason Capital, for example, says he believes the governance issues have been put to rest. His view is that, sure, the Batista brothers are on the board, but professional managers are the ones running the day-to-day, and the family is now 100% focused on making money for all the shareholders, not just themselves.
So that brings us to the final section. It's time to weigh the scales. How do you possibly balance this incredible business opportunity against some really significant risks?
And this really is the core dilemma, isn't it? On one hand, you have the stake case. It's a dominant global leader, it's got a proven record of growth, it looks cheap, and it could pay a high dividend. But the hamburger risks are just as real. You've got tough market conditions, confusing communication, and that very serious history of scandal under concentrated family control. You just can't separate the two. So, we'll leave you with the ultimate question. After hearing all of this, do you see JBS as a powerhouse protein producer trading at a deep discount? A real steak for the price of hamburger? Or is it just too risky, with way too much corporate baggage to stomach?